Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we expect continuation to the upside in an impulsive structure. After this first structure to the upside over here, which looks to be expanding, has to be a first wave, followed by a zigzag in an ABC structure where wave C ended in the most common target area for a wave C, which is between the 1 and the 1.236, taken from the high to the low of A to the high of B, which as you can see has been very nicely respected indeed. And then we would be looking again for another wave 1 over here, a wave 2, and we now want to see an impulsive structure to the upside in a wave 3, which then usually is the strongest and most impulsive wave. Now this scenario becomes invalidated the moment price is going to take the low of wave C over here, which is sitting at 29k. We want price to move towards the upside, and especially we want price to also go through the resistance area that we have over here. The moment this resistance can be passed, we could be looking for higher prices to come. If we look at the bearish scenario, then we are looking for potentially an impulsive structure to the downside to continue the downtrend that we've been in for a while now. In this scenario, the sideways structure that we have over here is a sideways complex corrective structure, and now we're then looking for this to be a wave 1, followed by a wave 2, and then potentially another 1, 2, and then a continuation to the downside in a wave 3. That's what we've been looking for in the previous video. However, now that time has passed, we get a little bit of a problem in a double 1, 2 scenario. So what you see in a double 1, 2 is the blue count and the white count. The white count is a lower degree Elliott Wave count, meaning we have the blue 1 and the blue 2, and then inside the blue wave 3, we have the white count being a 1, 2, 3, 4, 5 to finish blue 3, and then you have blue 4 and eventually blue 5. So because the white count is a lower degree count, you want to preferably see the white structures be shorter in time and price. Now this second wave 1 in white is longer in price compared to the first wave 1, but that can happen. That is more common than the sideways structures being longer than the first priority sideways structure. So the higher degree sideways structure, this wave 2, is shorter in time than the second potential wave 2 if price would move to the upside, because the fib time that you see on the chart over here, the vertical line, this one is taken from the low of the corrective structure to the high of the first wave 2, comparing the time it took to develop this wave 2 with the potential time it takes to develop this wave 2 over here. But as you can see, we're not even close to this interesting resistance area, the daily naked point of control at 29,475, and we already passed with this range over here the 1-to-1 fib time, meaning that if price would move to the upside again, the probabilities that this is still a wave 2 in a second 1-2 are going to be significantly lower, because this structure is then longer in time than the first structure, which is very uncommon. So therefore, preferably, this second wave 2 is already in a more bearish, or the most bearish scenario, where you then have a 1-2, 1-2, and this is the beginning of a bigger wave 3 towards the downside. So in this scenario, then we could remove this area, this potential target area, as we don't want to see price move up here for another wave 2. Preferably this is the high of wave 2, and then we're going to be looking for a bigger 3 to the downside. Now if we think about other impulsive structures to the downside, of course one option is a 1-2, 1-2. But if we think about potentially a diagonal where we are then looking for a structure like this, right, then we also have a problem, because the problem here is that the second structure that we have is longer in price than the first structure, and a diagonal is a 1, 2, 3, 4, 5. But wave 3 is then not allowed to be longer than wave 1. So having a diagonal over here does not really work for an impulse to the downside. And you can also clearly see that this is not a 1, 2, 3, 4, 5. And the reason being that if this is the high of a wave 4, it has overlap with the price action of wave 1, which is not allowed in a traditional impulsive structure. So a normal impulsive structure is kind of invalidated. For a diagonal, you do like to see overlap between 4 and 1, but wave 3 over here is too long, as it is longer than wave 1. Then you have an expanding diagonal, which is again very, very rare. And the other only option we have is a potential 1, 2, 1, 2, where the second one is longer than the first one, and this has to be the high of wave 2. So you can see that the bearish scenario is starting to become a little bit more difficult difficult because of time passing. Now, therefore, this sentence over here is important. The moment price is taking this high, the probabilities are going to increase for price to move towards the upside. Of course, as you've seen before, we do have resistance over here, and it does depend on how price moves to the upside. If you see volume increasing, price moving in a straight line, maybe with the news that we have later today, then of course there is no short potential over here at this resistance area, which is sitting between 29.4k and 29.5k. That is very important. If price is not going to move up impulsively, we might have a potential WXY sideways corrective structure, where this then is a W. We're going to be looking for an X and a Y or something like this, or this is then a WABC. Then we have an X, then we have a Y, and then continuation. But please keep in mind how price is going to move to the upside if it takes this high, because currently the bearish impulsive structures are not looking too great. A diagonal invalidated, a normal impulse invalidated, and a 1-2-1-2. Well, this wave 2 retraced to the 0.382, by the way, which is a rare target for a wave 2. As you can see over here, this is a rare target for a wave 2 and not a common target for a wave 2. And also this second wave 1 is longer than the first wave 1. So please be aware that upside here might be possible. If we then look at the CVD divergences, we do have bearish CVD divergences on the 15 minute. This is important. On the 15, we have a bit of bearish here, a bit of bearish here over here. Then the target is this low or this low. However, and I actually didn't put this on the chart, Annie in the Discord group notified me about this, that if you go to the 30 minute, we actually have bullish CVD divergence between these lows over here. Higher low in price, lower low on the CVD. Now myself, I'm a 15-minute trader, so I rarely go up in time frames. But if we go to the 30 minute, then you can see with this low over here, the green candle, you have the low on the CVD in blue, right? And then if you look to the right, you use the horizontal line of my cursor. If we look to the right now, then you can see that this area is below my horizontal cursor line, as well as the dip that we had over here. Basically meaning that we have a higher low in price, but a lower low on the yellow CVD. That is a bullish CVD divergence, where the target is then going to be that high. Now, therefore, we are in a little bit of a mix, because more locally, we have bearish CVD divergence over here. We had a lower high in price, higher high on the CVD. There's a bearish CVD divergence. And also currently on blue, we have a lower high on price, but as you can see, higher high on the CVD. That is a bearish CVD divergence. So we have both bullish and bearish CVD divergences going on. Usually the more local CVD divergences get priority, but please keep in mind we have also 30-minute bullish CVD divergences, but the local ones tell the story. So go to the 5-minute, for example, and keep an eye on what is happening over here. But the news is coming. It might be very volatile, and CVD might not be respected at all, because if we look at the news, 2:30 p.m. Central East European time, the red flags over here, we have news coming in. So make sure you trade safe around these hours, because price might be very volatile either to the up or the downside, but at least we are prepared for what we want to see. So if we then look at the probabilities, then the probabilities for me at the moment is I actually feel very neutral. And of course, this happens, right? In Elliott Waves. Previously, in the previous video, we had a more bearish feeling, but now because of time, my feeling is pretty neutral. And it is difficult to have a solid bearish impulsive count to the downside, as I have explained, with the diagonal, a normal impulse, or a 1-2-1-2. It's not easy to have a bearish impulsive count to the downside. So therefore, we can argue that if this high gets taken by price, if it moves to the upside and price goes above this high, we might go from a neutral standpoint to a little bit more of a bullish standpoint. Of course, we have the resistance, right? Don't forget about the resistance that we have over here and how price would then approach the resistance. But at the moment, I feel neutral. As long as price is below this high, we could say, hey, we are bearish till the local high is taken, and then we might switch to bullish. So please trade safe, especially with the news coming up. Have your plan, have your strategy, and make sure you get some profits today before the weekend hits, right? So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.